One thing that's very difficult for people to understand about stocks, certainly when they're newer, just starting their journey investing or trading, whatever it may be, is that understanding when a stock goes up, they think, oh, that means it's more expensive. When that technically is not the case. Now, of course, when a stock price goes up, that oftentimes does mean it's more expensive, but not always. Sometimes you have a massive earnings beat. If you blow out, let's just say you have a crazy blowout earnings, you beat by 10% and you guide 10% higher, maybe the stock goes up 7%. Now, you would assume oftentimes it does go up 12. But if it only goes up 7%, you're actually cheaper because the valuation of your company is lower. A good example of this is Nvidia. Just because Nvidia has gone up 1,930% over the last 5 years, which is incredible, doesn't mean it's an expensive stock. Now, I'm not saying it's cheap. There's certainly stocks you can find for lower PE. So we just use PE as a good metric for how much we're paying for how much profit we're bringing in. But it's not even that simple. Because if you think about it, companies that suck are not well run at all. People don't want to pay a premium for that. So their PE is going to be generally lower. It's going to be maybe closer to 10, maybe even under that. People are not high in the company. They aren't going to want to pay extra to buy into it. You don't want to pay extra. How much are you paying to buy into Intel? Now, if you hold Intel, I'm not saying it's terrible. I'm not saying you'll never make money from it. But generally, I mean, if you just zoom out, last 5 years, NVIDIA's performance versus Intel's, which one would you rather have owned? Every single one of you said NVIDIA, and if you don't, you're lying because you would have made so much more money. So people are more willing to pay a premium for a company like NVIDIA than for a not so well run company, certainly at this moment. So it's not just as simple, even as PE ratio indicates, okay, cheaper, more expensive. That's not even to mention the ways that PE can be distorted. If you're not profitable, you don't have a PE ratio. Maybe if you're just becoming profitable, your PE ratio is incredibly high, and then you look at that and say, oh, that's too expensive. So you can't even really go off that. Also, certain industries are just going to trade cheaper. Insurance companies, that doesn't mean they suck, and it doesn't mean they're super cheap either if they're under, let's say, 12 PE. Financial institutions, generally their ceiling is capped. When you think of something like an Nvidia, you can go up 1,930% in 5 years. Now, even for tech companies, that's incredibly rare. Even for very well tech companies, that's incredibly rare. But it can happen. When you look at a bank like Morgan Stanley, which I like a lot. I own Morgan Stanley. I've done well on Morgan Stanley, certainly as of late, but there's always a ceiling capped on it. So generally, those companies are going to trade lower. Now, just as an example of the inverse, quite a stark contrast to NVIDIA's performance. If you invested $100 in NVIDIA 5 years ago, you'd have nearly 2,000. If you invested 100 in Intel, you would have, less than 50? Less than 40. So quite a stark contrast, but good visualization. Just because it's down here doesn't necessarily mean that it's cheap. It doesn't, because there's so many things that go into this valuation. Now, you're pricing in, okay, well, they haven't been growing, they're declining revenue, so people are just out on it, but there's still a world where they do well. It doesn't mean that you should never, ever buy stocks that are declining. I personally am not super bullish on Intel. I wouldn't be surprised if they stagnated for a while, but there is certainly a realm, and there's certainly a possibility where new leadership guides them. They still do, I think, like $50 billion in revenue a year. If you could just make half as much on that as AMD did, profit margin on AMD, you would be worth $200 billion easily. They're at worth 86, you'd more than double. Now, I'm not expecting that to happen, but there's certainly a world where that does. So you really have to look at so many other factors other than stock price. And maybe now you understand, or you have a clear understanding that stock price, okay, it's dependent on how the company's doing. And that is partially true, but it's not 100% true. Now, I'm going to show an NVIDIA, for example. I know we're doing all specifically semiconductor stocks, but I just understand this industry. I've been following it pretty well. We look at AMD. They're down 33% this year. Okay, following our rule where stock price goes up, company doing better, Intel is where the stock price going down, company doing bad. Now you look at AMD last year, 33% down. Okay, that means the stock is doing bad. The company isn't doing well. Well, that's not true, actually. Actually, they had one of the best quarters they've ever had. They're guiding for the best revenue they've ever done, ever. And they're growing specifically their, data center, and data center generally. There's AI chips in there, but there's many different things in that. They're growing that like 150% year over year, which is their most important sector. And you may say, okay, why are they down 33%? Market sentiment. Market sentiment with AMD is that NVIDIA is clocking them, and they kind of are. But there's And, you see the PE ratio high. It's actually not that high. There's things going off with the writing debt. This isn't a video defending AMD, but the point of this is just because a company is doing well doesn't mean the stock price is up. It doesn't. It doesn't at all. People get hyped. Hype gets bought into it. AMD was here. It was at 80. It got hyped. Awesome. We hit 160. We hit 140. Then the market was doing terrible. Oh no, we go back down to 50, 57, 60. Okay, we get some hyper up 120. Everyone, dude, it's so much just sentiment. I was gonna go into something. It doesn't matter. It really doesn't. If you're curious, you can ask me in the comments. I'll tell you. But it goes down to 100. Okay, we're tempering our expectations. We go all the way up to 200, and then now we're back here. Now, during this situation from 2021 to where we are now, we grew, and we grew actually quite a bit during this time period. If you look at revenue, if you look at profit, certain industries have done really well. Certainly in 2021, they were doing incredibly well, and then they weren't doing great in 2022, yada, yada, yada. But there is market sentiment. What people feel about a stock is sometimes going to indicate its price. You can look at more specifically in an industry like REITs with Vici. Rates are high, that means stock price is lower. Oh, rates are dropping. Okay, stock price shoots up. Oh, actually, we aren't cutting as much. It drops back down. Literally, you can see it. Go to Vici, look at 1 year. 27, it goes up to 34, goes back down to 27. I bought a little bit more. It jumped right back up to 30. Boom, 7% like it's nothing. It's not that hard. It's really not that hard. I'm kind of rambling at this point, but the point being is you have to look at so many different factors, and that's why it's complicated. But if you really want to just nail it down to a couple factors, look at PE, look at growth over the last couple of years, then also factor in share price and factor in the industry. What do people think about the industry? What are the companies similar to this company? How are they valued? Are they going up? Are they going down? Is it because they're doing well? What is the market sentiment on it? There's so many different things you have to factor in, but one thing, if you get anything from this video, I've thrown a lot of information at you. Stock price goes up does not mean it's a good buy or a bad buy. It's expensive or inexpensive. It's going to keep running up or it's going to immediately shoot down because it's expensive. The inverse is true as well. Now, there's definitely correlation with a company being successful and stock price going up, but definitely not at all. You can give plenty of examples of stocks that were going to the moon and were basically nothing. Plenty that were, everyone was out on them, like a Meta, where they were at 75, and now they're at 600, 650 in 2 years. So anyways, I think that's all I want to cover in this video. If you guys enjoyed, if you were interested in me rambling all over the place in this video, if you liked it, if you learned something, I'd appreciate if you liked and subscribed. It helps the channel out quite substantially. I appreciate all of you for watching, though, and I'll just catch you next time.